Alright, good evening, good morning, good afternoon, good brunch. This is the African Crypto Warlord Show. Today we'll be looking at XRP USDT whilst having a look at BTC XRP, which will be a very telling time. Even though this is bearish, there's something to look out for over here. So what we're going to do is we're just going to go monitor our usual run, 21 day. 21 day has had an outlier event, but in the general term of returns wanting to decay to the downside from here, not so much. We do have the opportunity to stay in this downtrend from this candle, but we're looking to break away over here. We don't have any entropy, random chaos to tell us which direction we're in, so we're going to use Shannon Entropy, and Shannon Entropy tells us that it is sideways. And because this prints like this, when this goes sideways, you'd have seen in previous streams that it usually goes and prints a doji. So what are we going to monitor for? We're going to monitor for this break. We're going to monitor for one standard deviation move to the downside in returns, and for these to curl over. But because everything is pretty much erect down here, no red flash, I would expect the red flash at 58 cents. I'm going to say that there's a little bit of rectification that needs to come out on the lower term time frames. So here we're on the 14-day Binance, and what we're looking at here is we're looking at the same thing. It's sideways. Why? Both these guys are up, but that says they cancel each other out. This says this is the slower term one, and that pretty much just says if those two are sideways, there's an ancient bit of positive drift and expansion off of here. So my longer Pearson correlation saying that there's positive drift in the book. So it'll be harder to sell through on this 14-day candle, which would make sense if you're looking for the short. Your short will look for continuation, as we pointed out before. When this longer, let's just say this orange line, when the orange line gets to mean reversion, you'll see the candles at mean reversion. Is it going to have the bearish drive through mean, or is it going to get denied at the mean? If it gets denied at the mean, you'll have a bullish div. Alright, so that's something we'll be observing if we do get this low. Now what we're going to go look for is a little bit more contraction. That is the same rule, so that's 50-50 with a mean reversion on the 7-day coming off of a bear div. There's no levels in here at this mean reversion play, okay? So we got to make sure that it doesn't get front run to the downside. Nothing so much looking too bullish right now. That's why we're going to bring up BTC XRP pair later. What we can see on the 5-day though, which is actually pretty good to be brutally honest, is we're looking for a new trend. Okay, why do I say that? Our chaos says there's no more chaos. We need to cause some more chaos. Volatility says it's ready to get volatile and throw that chaos into a direction so that we can track it on entropy to say that the disorder or the chaos is going in this direction. So we're looking for that, okay? The next best thing, so the next print on this, which is in 4 days and 8 hours, which is a very long time, is this expands. This next one is going to go red. That will flick that around, and these are already in positive correlation. So whatever in the next 5-day print should be a buy order, right? Coming through over here. I'm not going to say that to buy. I'm just going to say, to me it says the candle go up on the next print. Right now not so much volatility, hence why the range is tightened up quite a bit. So we have some mean reversion. What have we got here? We have play off, a bit of drag, hitting an outlier event, right? Have had a wick here. To come and test again, we've been here already at 44 cents, so 43.81 mean reversion play. This starts to look for exhaustion to the downside, okay? This is getting a bit zigzaggedy. We are getting a bit of a trend off of here, so let's try to read this, which says contraction, contraction, positively correlated, moving into contraction, positively correlated. So 75% of the bears are in the market to the downside on the 3-day. I should have been writing this down, sorry, so that I can have a general. So 21 days sideways, side, 14 days side, 7 days down, 5 days expand. We just came from the 3-day, so that's expanding down to 24 hours down. 3-day is 75% bear on low vol. Okay, so 24 hour we already saw that is down. Now what's going to convert that 24 hour around? So here's your general play. As you can see, the wicks coming in, wick city, wick city. Why? We have a flip in volatility. Okay, so your next best print will be a contraction phase in volatility. As you can see, it's not getting so stabby, but if that doesn't happen, look for this region here. But when this goes green, you're going to have instant positive drift, which will try lift it above the mean. Alright, above this mean that you see here. It was definitely go trigger for the mean that you see over there. Let's just go start throwing on these guys. So this is the range it will look to trigger positive drift into. Okay, 6 hour. Now we can start dialing in some targets. 6 hour contraction positively correlated. Actually, the next best ebb and flow of this is for a drag through to the downside, because that's folding over whilst we have some contraction phase that's in a trend. Okay, so we've got to look for positive drift now to see what. Okay, here's a good play. If we close below a reverse wave trend, look for continuation down. Why? Because we'll be stuck in our trend over here. Our returns we'll have to watch. This wants to go hit a blue flash, and that will mean revert. So 12 hour says up, 12 hour says up, 6 hour says down. So maybe we're going to find our trend on the 90 to the 45 minute like time frame to watch to get a better idea on the extension of the trend. So this general next best phase is to expand whilst positively correlated. That's going to pick us up at least into this orange level for a failure if they keep it above the JMA. That being, if you keep it below the JMA, it wouldn't really make too much sense, as we've hit our outlier event. There's confirmation here. Let's see if we have VRE level on. Yeah, we have a weekly level on. Weekly 1 to the upside is where we're currently basing price action off. New daily print was over here. We rushed through it. Last night I was actually awake. It was at like 2 in the morning, yeah. So you rush through to the downside. You want to look for return to 47.53 before the end of close. The general idea being is scalp it. Well, if you've longed this, you'll look for initial profits at 47.14 or any one of these red lines up. But we have a cross over here forming, so for price action to get stuck over here, 4813, trap some liquidity, wick it out to 4849 to the upside. That's a good idea if there's more hunt. So if you fail from here, let's say I do believe we want to fail off of a cool point. So the cool point being reverse wave trend. You fail off reverse wave trend, we're definitely going to go look for the weekly mean that's printed at 45 cents 03. So there is. That's our 3 hour. Let's just go have a looky see. To the upside is initial is about 0.69%. To the daily mean is 1.57%. To the weekly mean, because this is our range. Sorry, the one at the bottom is the monthly mean. The one at the top here that I'm at, the yellow one, is the weekly mean. So weekly mean is 3.64% to the upside, as equally as it is to the downside. So that's 3.73% to the downside from here. Looks like fair targets. I'll say this will be a range. Let me switch off all of this so y'all don't go too blind. Make it big and switch that off. This will be the general range we'll be looking to be trapped in. Let me draw a big blue. Let me do something like that. Alright, that will be the range we'll be look to be trapped in, and then we'll look for resolution from here. Previous weekly mean is up here, so that would be the next natural target. If you close above your weekly mean, you start closing below your monthly mean. Let's go have a looky see if we had any previous data down here. There's one weekly mean. There's your previous monthly mean at 34.71. So a drastic wick. If we were to fail here, I would be buying in at 34.70 for a little bit of a longer term hodl. And if you hold above this monthly mean, you more than likely want to go touch your previous weekly mean. Okay, 90 minutes. Let's see if we can start dialing in some ranges here. Turn the VREs off, put the reverse wave trends on. Let me delete that. That'll be cool. Make that big. So this is what I like to see. Alright, we have some bull div forming. Blue flashes off. Okay, this is usually a nice strong signal. I want to throw the JMA on to make sure that, yeah, there we go. Cool. So close above the JMA, you'll have your confirmation for mean reversion to the upside. Next candle should also be mean reverting here on DRP. What's that? That was a quick flash to the upside. It should go a little bit red. We'll see. Unless it stayed for the trigger. So you have some positive drift formed from this time frame. Positive drift from this line and that green. Only a little bit of negative drift. So the negative drift is what's sort of keeping it underneath the reverse wave trend off of this initial push. 45 minute, let's see if that's sort of countering it, as we have 2 wicks over here. Expansion to the downside, sort of to the downside, looking to flip around with the bull, with a mean reversion to the upside, losing strength to the downside. Some blue flashes, that's looking gravy. So yeah, you're fighting for this VRE level in this region over here. You close above that, this PC will naturally flick through, and you'll have a little bit of confusion here, but I'll also pick that PC up. Alright, 30 minutes. So we're looking only bearish on the higher term time frames, given that we've had a wick to the downside. But currently right here, from the 3 hour to the 30 minute, 30 minutes looking like it's got positive drift. So we're going to be monitoring time frames. Is 3 hour, which is up, 90 minute, which is up, 45 minute, which is sort of sideways but wants to go up. 30 minute, the same positive drift. I need to put that in. 30 minute posy drift. That's gravy. So you'll see continuation into, let's say, this will be a little bit of a trappy, but if you get out of this trap, you'll be looking for this mean, or furthermore this mean. Alright, and now because this reverse wave trend, this line is the opposite end of this reverse wave trend, because it's below the mean, there's going to need to be a lot of hard work put in order to get these two guys to turn outside of reverse wave trend, and this one to turn above the mean. So currently you can see that's triggering into a bearish market for now, but this range is still small and can take at least 5 days or a good quick pump to quickly turn that around, or a quick dump to make that gap bigger for the same circumstance. The downside positive drift on the 30 minute, 15 minute, and then I think we'll be so we've demarcated the weekly range to the monthly mean. Monthly mean and weekly mean will be our range. So that was 3.6% upside. That's mean reverting to the downside. Nothing as of here on the reverse wave trend to confirm with that. That's expanding. Those guys are countering each other. We've wicked in here. We didn't really fail at a mean, so maybe to come down, wick into this region again. Let's go have a look. You see on like 5 minute. See if we've got a reverse wave trend that's basing this, that we can't see there. So we're looking for expansion here. Next best print. Here you go. This might be a nice little play to monitor. If this candle lifts up a bit, it should into contraction. Okay. So this is just being strung out for a little bit longer. So I'd say by the end of this video being posted, we'll be in 2 places. But given we're having a mean reversion, we're either going to bounce here, continue down into this reverse wave trend, but I'm going to leave it off and upload the video and say we'll be up into 4708, given we have mean reversion. But I don't know how long we're going to hang up there. And when that happens, we're going to have to go look at 45 minute time frame, 15 minute time frame, as to say, okay, cool, there's some continuation to get us back to the weekly mean, for example, from here to here. VRE, we are killing the internet today. VRE level up here, 4849. From here, these are any one of these targets. As you can see, there's a lot of cushion for the bears now to take padding, 0.45% on the way up. But if you get above, let's say this, if you actually get above this thing that's curling around, when you fall, this should be a book flip. So these sell orders should be turning into buy orders, and then we have a continuation strive through to 4752. Hope that was helpful. If it was, please do like and subscribe. Look at any failure point. If this video, if it's going down, it's more than likely because it's failed here, and you'll look for 4673 as a base, but it might come through there quick. But as we can say, when we left the video off, we're looking to at least get to our daily mean. We hold above there, we're going there. I hope that was helpful. Close below this red line, and we'll be going down to this yellow one over here, you could say. Ciao bella.